Welcome to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague
Yatin, Mota.
Well, Yatin, it turned out to be quite a forgettable week, this week, given the fact that the Nifty and Sensex have both lost 3% apiece, and that was largely because of the underperformance by financials.
Yeah.
Nifty Bank obviously came under pressure. Nifty PSU Bank Index came under severe pressure yesterday. Even though today we have staged a very smart comeback, but HDFC Bank, that stock has lost 1 lakh crore rupees in its market cap over the last 4 sessions. So that's the kind of pressure we have witnessed on the financials end of the markets. But today's action, we gave up all the gains that we saw in the first half. We ended below that 19,700 mark, and experts now say that 19,600 is a crucial support level for the Nifty. Let's also talk about some of the sectoral movers. As I was mentioning, PSU Bank Index has gained somewhere around 3.5%. But metals, FMCG, pharma, these were among the losers in today's session. If you look at the individual gainers on the Nifty, IndusInd Bank, SBI, M&M, Maruti, Coal India, and on the flip side you had Dr. Reddy's, Cipla, Wipro, Bajaj Auto, and HDFC Bank again extending its losses. But I think mid-cap end of the markets, how was it looking today?
So the mid-cap end of the market was quite mixed. In fact, we had a few mid-cap names and PSU banks which were up in trade. Also was in focus PNB Gilts because the JPMorgan bond inclusion announcement meant a lot for the company because they run a very large bond portfolio, and given the fact that there could be some substantial gains to that portfolio once the rebalancing happens for the JPMorgan bonds and they allot a 10% weightage to Indian bonds, which are typically the Government of India bonds, this company will stand to benefit. Obviously in the mid-cap end of the market, IOB, Bank of Maharashtra, and all of these smaller Central Bank of India were gaining in trade. Specifically, no, standout performance, but yes, Glenmark Life Sciences, that stock managed to recover 6-7% in intraday trade, closing at almost at the highest point in day, because this company, Glenmark Life Sciences, will be acquired by Nirma Group, from Glenmark Pharma, which is the parent company of Glenmark Life. So that was, one stock which was in focus on the back of the M&A activity.
Right, I think let's talk a little more about the bond inclusion, given the fact that India will be included in the JPMorgan EM bond index from June 28th, 2024. It will be done in a staggered manner over 10 months, and India will have a 10% weight on the index. Now, this sets the precursor for Indian bonds inclusion in the FTSE EM index as well, and the Bloomberg Barclays index as well. As you were mentioning in the afternoon, also $336 billion worth of bonds.
Almost 330 billion is the size of the entire pool, of which 10% weightage will be for Indian bonds, which means that $33 billion would essentially flow in Indian bonds over a period of 10 to 12 months, in a staggered manner, obviously. But $33 billion means almost 2.5 lakh crores, and that is the kind of liquidity which, as a country, we should be able to get. More importantly, this will help in two ways. Number one, the bond prices will move up, helping banks gain treasury, profits. And also, if you look at the cost of funds, given the fact that such a large inflow is coming in, you could have some better liquidity, and the bond yields as well as the dollar rate should be under control, which probably helps us as a country. And that is the reason why, despite a choppy, volatile session, the market tried to come back in the green to show the positivity of this particular event.
Right, on that note, let's take a look at some of the stocks that are on our radar this afternoon. Starting with Wipro, Yatin, and this stock came under pressure. Stock hit a 3-week low, given the fact that we had another senior level exit coming in this year. I think 9th for this year. CFO Jatin Dalal has resigned, and Aparna Iyer, who's also a veteran at Wipro. She was previously the CFO of the Cloud Services Unit. She's taking over as the CFO. But the senior level exits in succession since September 2022, 14th exit. So that is a matter of concern, and markets haven't really taken to it very favorably. In fact, Kotak Institutional came out with a report, and it said that these senior level exits are a matter of concern, and the markets will not take kindly to it. And the fact that the company is poised to underperform its peers. Remember, IT stocks have, of course, off late they have staged a turnaround a little bit, but they came under pressure because of the earnings. they were under pressure. Even the next couple of quarters are expected to remain muted, given the kind of weak guidance that most of them have given. And now higher for longer rates in US also comes as a setback, given the fact that there's already slowdown in client spends. They are either witnessing order cancellations or delays in deal closures. So lots of overhang for IT firms. So at this juncture, this set of negative news not very good for Wipro, and it is also a question mark over the kind of recovery that the company is trying to stage under CEO Thierry Delport, right? I think Street will also be wondering whether he will get an extension for a second term which expires in 2025 or not. So it looks like going is tough for Wipro.
Yeah, and a lot of senior level exit is what market doesn't like, especially in IT companies, which is largely a human resource driven business. But obviously, Wipro was under pressure. But one stock which was outperforming in a rather weak market was Maruti Suzuki. Stock ended 2.5% higher on the back of better brokerage expectations in terms of profits and earnings moving ahead. We had Citi, which came out with the report today. They have raised our target price to 13,600. This is a very big target, and probably one of the highest on the streets. Morgan Stanley also came out with a report on Maruti with a target of 12,000 rupees per share. Now, the thesis that brokerages are giving for the Maruti stock from here to see some good upside is number one, market share gains in the SUV segment. There were a couple of new launches with Toyota in terms of hybrid cars and electric cars moving ahead. Probably in the next 2-3 years, a lot of products are expected in this segment. Also, Morgan Stanley believes that moving ahead, company's margin profile, which is close to 9 to 10% on the EBITDA level, should increase to 11%. So the margin uptick should continue for Maruti along with market share gains. And on the valuation front, given the fact that the stock is trading at 23 times price to earning multiples on a forward basis versus the historic average of 25 times, makes it attractive to buy for institutional investors. And probably both, if you look at Citi or Morgan Stanley, they're expecting a 15 to 20% upside even at current levels for a stock like Maruti, which hit a fresh 52-week high in trade today.
Yeah, right. Yatin has been holding up above the 10,000 mark any which ways, and of course 33% upside is quite a huge thing. And plus Maruti management was on CNBC yesterday, and they expect very high volumes in October, the upcoming festive season. So that also seems to be boding well for the stock. But with that, it's a wrap on this edition of Closing Bell. Thanks a lot for tuning in. If you have any comments, write them in the comment section below, and of course come back on Monday and join us with a market coverage on Moneycontrol. But for all you guys, have a great weekend and come back refreshed on Monday morning. It's a goodbye from me and Yatin. Thanks a lot for watching.